your guys' conversation is just throwing out the questions. There's lots of them. The first one that I saw was if you have your customer vehicle in the shop, does the customer need to have coverage on their vehicle? And if so, what type, or should that solely be the responsibility of the builder or the shop?
Franco, let me take this and then I'll pass it to you because I'm going to give it to you from the perspective of the insurance company on the personal insurance side. I think it's a misunderstanding from the customer standpoint that their insurance will cover a loss in a shop because you've now hired someone to build your car. So your personal insurance might not want to touch that shop because most likely if there's an accident or a claim, it was probably caused by something else in the shop. And so I have I have shop owners that I deal with that they're taking a risk that they figure the insurance will pay out on the customer's insurance policy if there's a loss, but I doubt that because you're paid to do the work on the car. So there's a commercial exposure there. And when you're dealing with personal insurance and there's a commercial exposure, the insurance companies are not going, that most likely they're not going to want to step in and cover a loss in a shop. So, and I think a lot of shops that take that risk, but at the end of the day, when you're talking about care, custody, and control, that right there is where the insurance company can fall back and say, you know what, you didn't have possession of this car and we're not by contract required to cover the loss. They can do that and it's totally legal. So buyer beware on that one.
Right. Definitely.
We typically don't like to see it. We have lots of clients that want to structure a waiver or something, a disclaimer of some sort that says, hey, because of the value of your car, I don't want to be responsible for it. And if it's something that's signed between both parties, that there's an understanding that if a loss occurs, the vehicle owner is going to take responsibility. The problem we find is that insurance company, speaking to Trent's point, understands the Bailey role a shop owner has. The keys were in my care, custody, and control. The vehicle's in my care, custody, control. Therefore, by default, legally, I'm responsible for the outcome of that vehicle. Then they can always come back after that shop owner for the causation of that loss, specifically when the shop owner is negligent. You think about a fire that's caused due to ... reasons. They're always going to come back against that shop owner and say, well, you were the reason the fire occurred. Therefore, whatever waiver and agreement you made between the vehicle owner, our customer, and yourself, it doesn't hold up. So we don't like to see it. We also, we always try to stress, there's two ways to buy garage keepers. There's direct and there's excess. When you buy at excess, you're saying, hey, look, the customer's vehicle insurance is primary. I'm not going to take a role in paying damages unless I'm negligent. Well, negligence is kind of a slippery slope. So again, we don't like to see it. We'd rather write policies, direct primary, take care of the customer. Right. And then if we can go back after the negligent party, maybe the fire was caused by a neighboring property, then it's our job as an industry to go back after that negligent party. Not make it be the shop owner pushing back on the customer. That makes sense.
Definitely.
Yeah.
So that kind of leads us into a little bit more regarding the vehicles being in the shop. You were talking about making sure, and it was important that the customers get an appraisal and, you have this vehicle appraised. So people want to know, well, when do you get this appraisal? If it's a 2-year build process, and over the course of the 2 years, the value is changing drastically. It's being touched and worked on every day. So when's the appropriate time to go get this appraisal? And do you do it often? Do you continuously, every quarter we're going to reappraise this project?
Let me take that one, Franco.
Yeah, sure.
So
you go.
I think every customer is going to be different. It's what their personal risk tolerance is on that loss. I have clients that won't insure a car until it's $100,000. I have clients that won't put a car out there unless it's insured for $5,000. So it just depends on the risk tolerance of the individual. But I would say your insurance company should be able to cover the car during the process of the build. And during that process, So there's different terms in the industry. One is agreed value, another is stated value, another is market value. So let's quickly just go through the three different types. So market value would be a Kelly Blue Book, right? That's what your default is in insurance. It's a market value. You're probably not going to be happy with what they give you. Stated value is kind of in the middle. Stated value is where you say, my car's worth this, and the insurance company says, okay, well, supply receipts, right? That's why I'm just stating the value. And then there's agreed value. Agreed value is what you want or what your customer wants on their car, because when they insure the vehicle, it's agreed that if there's a total loss, that's what they get. There's no negotiation. So it's important to understand the difference between those terms. So going through the process of a build, it's most likely going to be a stated value. There's not a guaranteed number, but there's a starting point, and that's the important part of it. So you might say, again, it's up to the customer. They might insure at 10,000, then when it reaches 40, they do a reappraisal. So it really depends on what their comfort level is.
I think my take from that is that open lines of communication are of utmost importance between your customer, between your insurer. We really need to have these open communication, because every customer is different and every shop is different. They're not all doing $500,000 builds. So there's just such an array. It just really, I think communication it sounds like that's just the key.
Yeah, and I think you have to find a way to understand how Garage Keepers is afforded. That we tend to try to establish a maximum probable loss. That could be one vehicle or all vehicles. And we try to ask questions to come up with some average values. You have your outlier with maybe your most expensive vehicle, but that may not be common. And there's multipliers of trying to come up with a maybe number of vehicles multiplied by an average to come up with a limit need. Hopefully the limit gives you the high watermark of maximum probable if there was a loss of all vehicles. And we know how rare that is to have a complete total loss. It can occur. But the expectation is that that limit should always be greater than the maximum value of any one loss. So, I think when you're establishing the value, it's not so much understanding the value of a car when it starts versus when it ends, more knowing just what is my universe today as I'm buying a policy of all the vehicles, and that ebb and flow. As a shop opens its doors, they might only be doing 1 or 2 builds a year. As they build a reputation, next thing you know, there's 5, 6, 8 builds a year, and those cars get increased in value. That Garage Keepers has to follow that dynamic growth.